Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. U.S. GDP from Q4 came in line with expectations this morning. However, everyone, including us, we're looking for a softer than expected number, something closer than 2.0%. Instead, we saw 2.6%. The dollar really didn't take off, but safe haven assets did take a hit. Treasuries were lower, the yen was lower, and gold was lower. The dollar index finished the day in the green, but overall in the week, it could not get below or hold below the 96 area. Right now it's starting to move up. We got resistance around 96.30. If we stay below there heading into tomorrow, the bears are going to try to take this down one more time and look for a weekly close below 96. On the flip side, we're watching the euro very closely as well. Now, first key resistance in the euro on the FX Rundown from Tuesday, it did hold. And again, the euro, the second session in a row, the euro has retreated back. But more importantly, we're watching about 113.80. This was the major three-star resistance that it broke out above early part of the week. It's held it on the pullbacks, which is very constructive in building a base there. Tomorrow's data is going to be key and see if that euro can make a second or third run actually to try and get out above there. We have major three-star resistance right below 115. You got a lot of data tomorrow. Final manufacturing, PMI regionally, as well as the Eurozone read in the morning. But more importantly, you've got CPI from the Eurozone. You've got a lot of ECB members recently all talking about the TLTRO and potentially needing to ease conditions if conditions get worse over time here. So continue to watch that. See that CPI number tomorrow is going to be important. And then when we move into the U.S. hours, we also got the PCE numbers, the Fed's preferred inflation indicator, and you get ISM manufacturing. So that's all going to be key. But before we get to tomorrow, we have Fed Chair Powell tonight. He speaks at a dinner, 7:15 p.m. Central Time, and then ahead of him, we do have Cleveland Fed President Mester. So all this is going to start to lay some groundwork as we head into tomorrow. Yeah, of course, Fed Chair Powell did have his two congressional testimonies this week, and we didn't get a whole lot of market movement from that, but see what if he has anything new to say after that GDP number today. So again, watch that dollar index, 96.30, really could be a ceiling. If it does, the bears can reinvigorate the selling. And then with the euro, you want to watch that about 113.75, 113.80. It's going to be a good support level to keep that uptrend that it's trying to create intact. Moving on to the yen, it did take a hit today. It's trading lower. This is a new swing low for the yen. But you know what? It has not broken down from a potential descending wedge. It's a very wide-ranging descending wedge, which can turn into be a bullish pattern. But as those descending wedges wedge out, there is time that it can extend slightly lower lows over time. So continue to watch that. But overall, what you want to take from here is the continuous 200-day moving average, which is just above the 90 mark, is now broken. So that's going to keep the bears start trying to push the pedal to the metal and take this thing a little bit lower. The dollar index tomorrow is going to be key to watch and get a gauge if the yen can't bounce back. Another thing to watch too is the equity prices. The equity markets are holding on to the late gains from last week. They're not holding on to the Sunday night gains right now, but they're holding on to the gains from later in the week last week. If they give those up at all, that could also reinvigorate some of the buyers in the yen. Now looking at the commodity currencies, the Aussie dollar, tonight you have new home sales, new construction work numbers. Keep an eye on that. More importantly though, is actually a number outside from Australia. It's their number one trade partner, China. You have a manufacturing number. It's the private manufacturing read. Last night's manufacturing PMI number was a larger contraction than expected. The Aussie did finish lower on the session. It's facing a major three-star support level. It's a level that's tested multiple times. Be very cautious here. We did have a neutral bias in the FX Rundown earlier in the week. And now our bias did express concern of this market being able to, some of the sellers being able to take control of it if it did start to slip. So that concern is very relevant right now as the Aussie is trying to look like it could slip a little further. Watch those numbers tonight. And then for the Canadian dollar, it's holding very well given everything, but some of the inflation data today was softer than expected. It's holding very well. The crude oil up at 57 bucks. It has helped the Canadian dollar move better. We have GDP numbers out of Canada tomorrow, so watch that amidst all the other data that's coming out. What you really need here, more than anything, is a breakout above major three-star resistance. We talked about this on Monday and Tuesday in the FX Rundown written report. Go read that, check that out. Some of those levels, some of those numbers can really can see what the landscape would be if you get that breakout. Give us a call. We're here to help talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates, and you can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.